this point in time, and it says there's a profit of 2660 crores. That's the standalone, and the standalone, I think net sales comes in at 9445 crores. But these are standalone. Let me see if we get the consolidated. Well, I think the consolidated has also come.
29,300 crores is what we're getting on the top line. So we were estimating a number of around 29,600. Very small miss over there, but I'm quite worried in terms of the profitability number. Now, we were working with an operating profit of close to around a near 2,400 crores approximately. That number has come in only to closer towards 1,800 crores roughly. So that's a bit of a disappointment that I see. The consolidated number should be up for you on the screen. While the bottom line, remember, it's factoring in a lot of one-offs. There's that big gain that will be there because of the sale of the Tata Steel shares. So that as well has been accounted for, I think.
There's an operational profit of just 459
correct,
crores.
And you put that together with the depreciation of around 1,370. That will give you a number closer towards 1,800 crores. We were working with a number of around 2,400 all the way to around 2,500 crores. So that's really a big miss. And if you just take a look at it, there could be some details that are there. It's not looking like, in fact, there is any big bump up. So it appears that there is an operational miss, though the top line has missed by a very small margin. The other income has ballooned up. It's coming closer towards 3,000 crores, taking into account all the one-offs as well.
So the profit at 2,349 crores is really a work of other income.
Yeah, exactly. So that number really should not count for much. But I think they've given the volumes as well. So the European operations volume should come in. That's come in. The production numbers come in around 3.58 million tons. But the sales number will be really the important 3.27 million tons. So just pull that number up. We should flash that number. The European operations, the number has come over there. And they've given the turnover as well. Company reported an EBITDA loss. That's really the big one over there. If you just take a look at the European performance, the sharp deterioration in the market conditions affected the performance in UK. And the company reported an EBITDA loss this time around of around 238 crores. That's not going to go down well at all if you take a look at it. Let's pull up that number. EBITDA loss from European operations at around 238 crores. The top line, we were estimating volumes of around approximately 3.4 million tons. That's coming at around 3.27 million tons. That's fine, but if you're delivering an EBITDA loss, that's really not going to work very well.
1830 EBITDA.
Yeah, so that's the total EBITDA, and let's pull up the standalone numbers as well. Because the street was working with standalone EBITDA of around 1,500 all the way to around 1,700 crores. Now we're having consolidated EBITDA at around 1,800 crores, telling you that in fact the remaining part of the business hasn't done well whatsoever. We already have the European operations. They have given you an EBITDA loss of close to around 230 crores. So that's fairly disappointing. Let's pull up the standalone numbers as well. We had a poll of only around 5 to 6 brokerages. And if you take a look at it, the top line over there has come in at around
9445.
Yeah,
that's the standalone top line.
Standalone top line, closer towards 9,000. If you take a look at it, the total income will be around 9,500 crores. So that's better than what the street was estimating. We were working at a number of around 8,800 crores. That's only around 6 brokerages. The volumes are on the higher side at around 2.33 million tons. So that's why, in fact, there's a beat on the top line. While if you take a look at the operational performance, it's at around roughly around 1,800 crores. So the standalone EBITDA as well has come in at roughly around 1,800 crores. The consolidated EBITDA as well has come in closer towards that number, telling you that the rest of the business hasn't done much, and they've explained it in terms of the big loss that we're seeing in the European operations as well. These numbers, point blank, they're not good at all.
The company is also saying in Europe, I'm just reading commentary further in the press release, Nigel, that the company has taken further impairment charges in Europe. They're very clearly categorically stating that conditions in Europe are extremely, extremely weak. I think we also have some analysts joining in. Chintan Mehta is joining in from Sunidhi Securities. We'll also be getting Gaurang Shah in a bit. Chintan, let me come to you first. First thoughts, first glance, numbers a big miss for you?
Yeah, we were expecting something around 2,200 crore, 2,300 crores kind of EBITDA on a consolidated basis. But that primarily looks at around 1,800 odd crores, 1,800, 1,900 crores of EBITDA. So that definitely, see, volumes were expected, the numbers which were given much lately in terms of production volumes. We estimated 2.1 million tons of volume, which against company reported 2.3 on standalone basis. So the revenue beat was, quite expected. But that shows out that to push on higher volumes, they might have compromised on the margin front. That looks have yet to go in detail about the results. It is just flashed on.
All right, Chintan, let me get you in on this. You know, the European operations volumes have come in at around 3.3 million tons. That's not the problem, but what was your EBITDA per ton that you were factoring in? Because I can just take a look at it. They have mentioned that they have delivered an EBITDA loss of around 238 crores. I think the lowest estimate on the street, Credit Suisse, I think they were estimating closer towards $10 per ton. What was your estimate?
Right. We were expecting around $29 EBITDA per ton. But see, Nigel, the problem is that they might have some, exceptional as well.
Yeah.
We need to again listen to the commentary for the management of the European operations, because European operations have a habit of, reporting certain exceptional items in their expenditure. So, taking that into account, if it's an EBITDA loss, time obviously it looks bad numbers. But we need to wait. How do they, explain EBITDA loss? Is it kind of a one-off or something which has taken expenditure side?
Okay.
Yeah, but even the debt number.
See, there is something called restructuring and other provisions, employee separation compensation, provision for demands and claims. All these are below the profit before exceptional items in the consolidated P&L. So perhaps it is these that is eating into the EBITDA of the international division. There is provision for diminution in value of investments. That's about 90 crores. Provision of impairment of non-current assets. That is 7,924 crores.
Yeah.
That's a big one. And then there is provision for demands and claims, 880 crores. Employee separation, 292 crores. Restructuring other provisions. Okay, that's not a major minus.
Yeah,
but I think this provision for impairment of non-current assets is the one that's eating up 7,924 crores.
Yeah, Lata, but it should have been routed through the profit and loss account. You know, if it's not routed through it, then it should not result in a big EBITDA loss.
This is P&L, isn't it?
As well. So if it's reflecting in that number, then that's fine. But I think the number's too large. Otherwise, it will be too good or it will be too bad. So
yeah,
is this a fresh impairment? Is it
no,
a fresh
this is not
impairment?
routed through the P&L.
yeah,
He's right.
And also, we had that pension scheme that was resolved, etc. And no one on the street, I think there was only one brokerage that came out of the sales note, and they said it will be routed through the P&L. Besides that, no one said that, in fact, that it will be routed through there. But let's go across. We have another opinion coming in. Chintan, just hold on to the thought. You can go through the numbers further. But Gaurang, what's your take on it? I mean, it appears like it's a fairly big miss, and the stock was sensing it, but it's even worse than the lower estimates, I think. Gaurang?
Yeah, Nigel, sorry, tell me.
Gaurang, we're just looking at the numbers. I think the big news that we have is that the European operations have dipped into the loss yet again after a couple of years. What's your take on the numbers?
Well, Nigel, first a disclosure from our side. We have a sell call on Tata Steel and a lot of other, metals related companies, and these numbers. I think one thing I must point out is nobody would have expected such a huge bump up on other income from 320 crores to 2,900 crores. I think that's huge. And on the operation part, I think as we go forward, Nigel, it will be the quarters to come by that will even put in more pressure. I would also want to hear the commentary from the management in terms of the inventory pileup that they would have had, and what are the kind of realizations that they expect in terms of prices, both on the domestic front and in the overseas front. Operations from Europe is definitely going to be a huge strain on the balance sheet going forward.
Gaurang, as we're awaiting Mr. Kaushik Chatterjee to start off, I just want to quote what they're saying in the press release. You mentioned commentary. I don't know what sort of green shoots we're talking about when a company like Tata Steel is saying this. And they're talking about India specifically. During the quarter under review, domestic realizations in India saw continued pressure. And then they go on to say that subdued manufacturing activity in the country adversely affected the underlying domestic steel demand, which decreased 5% over the previous quarter. That's the kind of commentary that the company is currently giving us. And this is Tata Steel. And, when we are talking about a pickup, etc. Okay,
right,
I think we have the
across to
Conference for declaration of the second quarter and half-year results of 2015-16. Before I start on the presentation, may I request for a safety announcement, please? Will you just come?
Good evening, ladies and gentlemen. Welcome to Vivanta by Taj President, Mumbai. I am Vikas, Security Officer on duty, and I am here to brief you about the safety and security procedures. Your safety and security are a prime concern to
Okay, I think we are getting more numbers. This one is from Cipla at 431 crore against an expectation of 520. That's another rather bad number for the market. That's what over 25% less than what the street was expecting. So Cipla profits also not going to look very good. Okay, that's the consolidated income. That's also come in a tad lower. So this is an operational miss. Total income is not way below what the street was expecting, but it's quite clearly the operational issue that's going to hit consolidated EBITDA as well, coming in only a little less. This is largely in line at 789 crore. This is only marginally lower than the 794 crore that the poll threw up. But the miss appears to come more on the net profit front. EBITDA margins have actually improved a bit at 22.9 compared to the CNBC TV18 poll of 22.3. So this is not a serious operational miss for Cipla, but there is clearly something at the net level that's not going according to the analyst expectation. We'll just get to you in whether there was no exceptional item. But clearly it's the profit and the profit number that is looking a little lower than what was expected. Okay, that's the EBITDA number. That's come largely in line with expectation. I think it's a largely inline number. Nothing much to worry. Tax expenses is 154 crore and the total net thereafter comes in at 407 crore if I'm not mistaken. Compared to 690 crores. So okay, this is a consolidated net profit coming in a little lower than the CNBC poll, but just about everything else seems to be coming in line with expectations. Okay, we'll do one thing. We'll cut back to Tata Steel, where I think Kaushik Chatterjee has resumed speaking, and we will analyze the Cipla numbers in just a bit.
To say that we have achieved best ever performance and long periods of injury-free operations across many areas in our company. The lost time injury frequency rate continued to improve, and it reached best ever performance of 0.4 for employees and contractors combined in the first half of 2015-16, which is a reduction of 10% in LTIs from the last financial year. Moving on to Tata Steel's engagement with the communities. Tata Steel Group continues to remain focused on improving the quality of life and engaging with communities through health, education, sports and infrastructure development in India, Europe and Southeast Asia. And some of these are highlighted in this slide. Amongst the various CSR programs, last year the Mansi project was cited as one of the best healthcare practices in the world by the jury members of the Economic Times Awards for Corporate Excellence. Tata Steel is part of the Dow Jones Sustainability Index with an overall score of 80. Well, we'll cut back to